Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. I start with the idea that nothing is impossible and everything can be done in the end. Albert Freddy. That's a great one, man. That is absolutely a great one. Market-wise, let's take a look at it out here. We had the Dow Industrials up 228, NASDAQ up 54, S&P's up 25, gold contract down $3.90, traded at $1,103 an ounce. Silver up 1 penny at $14.37 an ounce. Platinum up 7.70 at $9.62 an ounce. Copper up 2 pennies at $2.42 a pound. Light sweet crude up 67 cents at $45.09 a barrel. Bonds. Now this is the number, folks. This is a trip and a half. 10-year down 26 ticks at 126.23. Wide price spread, accelerated volume on the way down. Big numbers. 30-year down 2.5 points at 152.15. Also wide price spread, accelerated volume. That bond market, folks, is saying that rates are going up. Total switch in the bond market. Not a total switch because we did come off the high with some volume. Bottom line, though, kept going up. This broke down today. It broke down with volume. The bonds have continued for the last 3-4 years to give the best, indication of where they're going, where the rates are going. Bottom line, they broke down today. That is bringing the probability, in my head, much higher that they're going up on rates off the lows. 7-year lows were going up 25 basis points. King dollar. King dollar up 373 ticks at 95.78. Now, divergence big time because fundamentally, if you're going up on rates, bottom line, King dollar, she went to the moon. King dollar can't handle a higher price. Euro down 50 cents. 50 ticks at 112.67. And the yen flat at 120.62. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. This is what you have. Had price going with it out here. You're up $2.40. You did 106 million shares. It didn't get to the swing point that I was trying to get to, folks. That is September 9th. Now, September 9th, we got to 199.47. You had 149 million shares. So check this out. Today, we do 106 million. You're going into 149, which was the highs of the 9th. You're going into 274. Well, here, no, it's not even 274. There's another little high that's tucked in here on the 28th of 160 million. Then you're going into 346. So the correlation goes like this. 106 into 149 into 160 into 346. That's saying no juice. Coming into the supply line, people just trying to get their money back. NDX 100. Now, the 3 Qs, that gave us information in the marketplace today. It failed on price, failed on volume. Actually, the 3 Qs didn't, okay? The 3 Qs didn't. The 3 Qs are over the highs of the 9th. The highs of the 9th were 106.31. We did 47 million shares there. It did 29 million, closed over them. Bottom line, can that go to 107? Yeah, it can. That being said, though, let me bring you over to the futures because the futures failed. NQZ5. The futures right now, we are NQZ5. Okay, so the NQs are at 43.52. The Qs got over the high. The high that was generated out here was the high of the same trading day that we're talking about. That was the benchmark, the 9th, 43.61. We get to 43.64. You close out, well, we're going to be closed in another 4 minutes. 4:15 closes. We're going to close out with lighter volume. That's the bottom line. So, that is saying that the NASDAQ is the only one that actually hit the swing point, number one, and you close underneath it. That's saying you're going to back off. Now, let's go into the bond market, because the bond market, this is just amazing, actually. So, we pull the bonds up. First, I'm going to go to the 10-year. 10-year goes south today. 929,000 contracts, which, you know, is a lot. The bonds can do 1.2, 1.3 million contracts, though. You take out a swing point. The swing point had 1.1 million. So it's not an ABC down. The way it traded, however, is that this baby can get down to like 125 in a heartbeat, and you're at 126.23. The 30-year, take a look at the 30-year. What the 30-year has done, 30-year comes down at 2.5 points, breaks out its lows, has increased volume, not an ABC down either, because last time we were down, it was 273,000 contracts. That was on the 9th. Low there was 152.14. You're at 152.16. This thing wants to go lower, though. It's set up. Now, the correlation and more of a confirmation is that if we go over to the 20-year TLT, what the 20-year TLT also did is this. That broke. The 20-year TLT is an ABC down. It broke the B point, broke it with volume. If we take a look at the 2-year, now what ends up happening, folks, so check out what ends up happening. If the short-term rates go up, it's going to be the short end of the curve that goes up much quicker than the long end of the curve, even though today, bottom line is that you had that long end go up pretty dramatically. If we take a look at this 2-year, okay, what you're going to see, whoops, close that, baby. Okay, let me see if I can bring this up. You're going to see, there it is. Okay, so you're going to see a breakdown, and that breakdown is pretty extensive. If I bring this breakdown back and really just set up a break, this is saying that September of 2014, the 2-year, right now the 2-year, folks, is at 99.21 point and a quarter. So that's, what's that? Oh my God, that's an interest rate of 10/100ths of 1. So this is saying it's going to go to 98.15, which that's a big number. Meaning that would be a 2-year would be 1.5%. Now, let me just see where we were. September of 14. Let's put the 10-year up here for a second. U.S. No, I'll put the 30-year up. September of 14. That's what we got to look for. You stay right there, folks. We'll be coming right back, and I'll have that number for you where we were of September 14. There it is right there. 136.20. Oh, we have action. You stay right there, folks. We'll come right back.